The upcoming subject, digital transactions, regulation, and security, will answer what are the challenges facing the ecosystem and regulations in putting forward tangible solutions to maintain secure transactions and compliance without hurdling innovation. Please welcome Clinton Firth, Partner, Advisory Services, MENA Cyber Leader, Africa, India, and Middle East at EY, and his panelists.
All right, thank you. So just a time check. How long have we got? 20 minutes? 25? 30? 30? 45? You've got 30 minutes. All right. 30 minutes. We'll try and make this as interactive as possible. Obviously, my esteemed panelists are up here as well. If you were sitting before lunch, we were sitting up there having an argument before. So this session is going to be very interesting, I think, for sure. So the session's all about really about what's happening in the digital platforms and the services across MENA in 2015. What we're seeing is an exponential growth. So more than 24 million was transacted through digital platforms, right, recently, and now expected to reach about 69 billion, and that's according to Payfort as well. And as we're seeing more and more digital adoption in the market, there's going to be more challenges for the regulators, the governments and commercial entities alike. So there's lots to consider here as well. And certainly in 2016, we probably saw more cyber attacks than we've ever seen across the world and across in MENA as well. So the questions we're going to highlight today, the session is about digital transactions, regulation and security. Obviously, we've talked a lot about regulation. We'll sort of touch on that, but we really want to get into the deep dive about what is a digital transaction and what's actually happening there. So to introduce the other speakers that we've got here is Omar Sududi. Over here, put your hand up so they can see you. Just to confuse issues, we've got two Omars, or Omar and Omer. So Omar is the Managing Director at Payfort, leading online payment service providers in the Arab world, and one of the co-founders as well. So fantastic. So thank you for joining us. Really appreciate it. We've also got Omar Karatash, who's also the co-founder of SaaSPass. Now, SaaSPass is a very leading, innovative identity access and management solution that covers holistic end-to-end identity access and management systems for end users all the way through to commercial organisations as well. So please welcome them while we sit down and we'll start the questions. Welcome, gentlemen. I hope we can continue the passion we had out there in the foyer as well. So really appreciate that. So the first question we had up here was really, can you give me, maybe start with yourself, what's your perspective around the innovation that digital payments will bring to the industry and to the organisations? Really, what's the top three things you're seeing in this area?
I personally think that in terms of innovations, there's going to be a very disruptive, and it's happening, a disruptive effect on institutions such as banks, other financial firms. Think of it like a dam bursting. You're either going to ride that wave or a tsunami that's coming towards you, or it's going to annihilate you. And we're going to see a lot of institutions suffering in this regard. In terms of the top three innovations, I would list it in this order, being one, APIs. This is going to have an extremely disruptive effect in terms of allowing fintech companies to integrate into banking systems. There's just a wealth of things that can happen. So if banks have the API effect, but it's not only in terms of banks, it's also in terms of applications. The first ones to be used were in China, WeChat, integrated payment systems inside their apps. So you could have someone send you an email or have an application that has a command bot that allows you to make any payment from X person to Y person. And it's completely bank-free. So this is going to be very disruptive. The second disruption point that I personally see is in stronger mobile authentication. Now, what we have is all of these transactions taking place, but with a weak authentication module, being, let's say, usernames, passwords. But using and harnessing the technology that smartphones have, using the biometric identity to then generate dynamic key sets to allow secure entry into systems is going to be another big disruption point. Okay. And this technology is going to be cloud-based. The third one, I would say, is blockchain, because blockchain provides you a public ledger of basically having a secure and trusted, it's very important, the fact that it's trusted, way of saving all of this data and basically recording it on that basis. So it can be used across the board. Now it's not, but for letters of credit, for example, in banks and many other places. And we're going to see this being used across different industries, such as the health industry, for your health records. Right now, you go to a hospital, your records are there. You go to another hospital, they're not there. They have no clue who you are, what you are. Blockchain technology is going to evolve, and I think financial services are going to basically enmesh with other different areas. So to summarize, that's what I would say.
Fantastic. So to challenge that, Omar.
Yes, well, I think Omar said it all. All I can add to it is that we are in a sector that is highly regulated. So there's always the argument of innovation versus regulation. I think moving forward, and I always say this to all the fintech entrepreneurs, is that as an entrepreneur you have to compromise until the regulator legalize. So you have to innovate through regulation or via regulation by maybe getting a financial partner, or basically that would be a compromise. But also what we started to see in the region, such as the case of the, for example, Jordanian Central Bank, we started seeing that the regulator is also trying to regulate via innovations as well. So how do you bridge that gap between regulators and innovators? Because if you work on a law, let's say, and you publish that law, and then 6 months later there's a new technology, you're not going to keep going back to the Senate or Congress or whatever legislative entity in order to regulate. There are reasons why a lot of financial or fintech is not regulated in the U.S., for example. It is regulated in Europe, but it's not regulated in the U.S. I think a big component for a lot of banks, like Omar touched on, is the API. So how do you open up your financial institution to a lot of fintech companies to process payments and remittances and issue credit and issue financing, while maintaining your governance that you have to abide with, compliance and all that things. I think KYC is also an area maybe that we'll see a lot of innovation and a lot of investments. KYC is know your customer, because the tools are there. We have more tools. We have mobile. We have geolocation. We have a lot of more information that financial institutions can actually harness that information in order to KYC a customer better than a scanned document or something that can be faked quite easily. So you'll start seeing a lot of, especially in our region, by the way, because we have zero access to information. In Europe and in the US and in other markets, you have credit bureaus, you have a lot of public information that we can access, while in our region, there aren't any. So I see that as a challenge, but I also see it as a huge opportunity in the next few years.
Okay, that's good. So you talked. I really liked how you brought the one of the inhibitors around the regulation, maybe, and some of that causes that. What are some of the other inhibitors do you think that will stop some of this innovation in the industry coming forward, Omar? What else do you think we're going to see?
Trust. So
Okay.
we do an annual report called State of Payments Report.
Yeah.
This year we're launching State of FinTech report in middle of March. So we've done a survey. We've done a survey of 5,000 people in 8 countries, and we asked them, why don't you? First, are you aware of some of the fintech companies in your market? And they said yes, but over 50% of them says, I don't think I'm going to use them because of the trust issue. People still trust the bank. So as a fintech company, the first thing you want to do is you need to figure out a way to how you establish trust. Because at the end of the day, if you're trying to lend someone some money or process a transaction, whatever the case may be, people still trust the bank, right? So the fintech has the innovation, but might not have the name or the brand or the trust aspect of it in order to get that customer, comfortable making that transaction. So I think this is a very important area for any fintech company to address right away. How you're going to build trust.
Okay.
How you're going to make your brand is about trust. That's why our slogan is powered by trust.
Gotcha.
Yeah.
Fantastic. And in particular, we were talking just before about some of the inhibitors technically around, especially in the region. Maybe you want to give us an idea of what your thoughts are about what's the inhibitors around digital payments.
I would say that, adding to Omar's point, also to bring it into what I'm going to say, is the trust issue is, I think, a mental construct that we have in our minds, and usually the end consumer themselves don't really have these issues. Let me ask you all, who uses Facebook over here? Hands? Right? We all use Facebook. We put our lives up on Facebook. Would you give that much information to your banks? I'm sure you would not. Like where you are, what you're eating, what you're doing.
Yeah.
And you're going to start having social networking sites like Facebook, Snapchat enter the banking space, and they're going to disrupt the banks. That's the next step that's going to happen because they have the KYC. It's just like how PayPal entered this market, going right above the banks.
Yeah.
They're like, okay, regulation doesn't allow us, fine, we're going to do it. We don't care. And people are going to use these products. So either banks are going to die. I mean, I'm sorry if I'm going to sound like very
Bit controversial. We love this. So this is good. No, please do.
controversial about it.
Facebook is hiding.
You know, you're either going to die, or you're going to have to harness this tidal wave and generate energy out of it and become a competitor. Like, you know, the mentality part that you were talking about, it's a very good point. We have a lot of neobanks, you know, challenger banks as they're called, as our customers. I've noticed this. They usually have one meeting with us, and then they've signed up already in 1 week. They've done their whole integration in their system in a matter of 4 hours, and then they're back to us like, this is amazing. Can we do this? Can we do that? Can we do this? They never have once told me or any of our team members, what would the regulator think? What would regulation be on this matter? I have not heard this sentence once. They don't give a damn about the regulator. They're like, you know what? Fine. Let them come after us. Let them try to find us. It's like a very disruptive mindset. Think of like Donald Trump. You know, he'd say whatever. People would go, oh my God, he's saying this. And then his, you know, popularity goes up, votes go up. That's exactly what's happening. This, you know, fintech, challenger banks, this technology, it's the Donald Trump. And you guys are either going to have to harness that wave or, you know.
So what I'd say right here is that you are based out of San Francisco.
Yes.
Okay, we won't ask you which way you voted. By the way, just in case you didn't pick up the accent, I'm not from America. I'm Australian, okay? So I don't condone Donald Trump at all. I did not vote for him. And I will never.
You might have noticed.
Exactly. Thank you. So that's a really challenging view, right? Around the innovation that's coming, the APIs integration, the fintechs are pushing hard, the consumers asking for more. You know, we're talking about putting more and more data in the cloud, more and more trust in those areas as well. But back to, are there going to be? Is there going to be a regulator in the future? I mean, a question over to you: do you think there's a room for a regulator in the future, or is maybe this is the beginning of an end?
Blockchain. I think blockchain or Bitcoin is the first iteration of a cryptocurrency that can be widely accepted, not only by the consumer, but also by any sovereign. So any sovereign has to protect its own, right? So you have to protect yourself against money laundering and terrorist financing and a lot of serious matters. So we do appreciate when the regulator comes to us and say, we want to protect our people. So I don't think that's going to go away. But I think the tools that the regulator use probably will be different. The process might evolve a bit as opposed to trying to catch up with innovation. No, you can't. You can't do. We started seeing it already in the region. So in Abu Dhabi, there is a regulatory sandbox set up by ADGM. So that's where they invite a lot of companies without any regulation. Let's work. Let's have beta tests and limit it to a sample, and then after that we can regulate. As opposed to let's come up with the laws that is going to govern an industry, and those laws will not apply because the consumer will not adopt those laws. So I think you'll find a lot of. I think the process will definitely change between a regulatory agency and the companies in the ecosystem.
Gotcha.
Could I add on that?
Yeah,
point?
please do.
I'm going to talk from a purely. From a startup perspective, we have that startup blood. We're 50 people. We've been around for now 3.5, 4 years. We're not a startup anymore, but we still have that DNA. When we get invitations like that, we're just like, guys, go to hell. We don't have time to go deal with your application process, with your vetting process, with your, let's do a POC. We're like, hey, you know what? Just go to our website, sign up. It's free. You need help? Email support or start charging, we'll have a billing relationship and then we'll give you enhanced support. And that's the case with a lot of these companies. They don't have the energy. They don't have the resources to deal with you. In terms of, let's say, a sandbox or let's have a pilot program, because there's just so much fruit in the world. They're like, all right, fine. You have that. I'm going to go to the UK. I'm going to go to Canada. I'm going to go here. Why am I going to waste my time and energy dealing with this bureaucratic inefficiency, so to speak?
Yeah, I know the word you were thinking of.
Yeah.
It wasn't inefficient. It wasn't inefficiency. I can tell you that right now. But I guess that sense of the role, when it does go wrong, and I think we've got that mix of the balance between that innovation and that regulator maybe sort of stemming, trying to get it out of control, that horse that's running off down the road. At the same time, there is some sense and a role for that regulator in the future, maybe around some fraud and some international, terrorism funding or whatever it's going to be as well. Any other roles that you foresee that the regulator would play in the world of banking and fintech in 20 years?
I think a regulator primarily should be a knowledge base for all the institutions that are involved in, disseminating information and trying to understand best practices from one organization to another organization, as opposed to a one channel or one way communication. Here's our laws, you have to abide by them. If you don't, you're going to get fined. More of, this is what you did wrong, this is what you did right, this is what we need to work on, and iterate.
Gotcha. So if we've come to the world now where the world is the future, let's say that the banking industry is the world of the future of Uber, right? Where we have much more distributed, no more controls, no more big taxi areas. We'll sort of be a lot more choice for the consumer. They can do what they want to do. However, I'll move it now to the cybersecurity field. So what happens in that sense? Because in the moment, the banking regulators put a lot of compliance, a lot of regulation on the banks to provide those cybersecurity measures. In the future, it's going to be more of, I think, maybe it's going to be more consumer choice around how they're doing it. What do you think those roles, especially around, you mentioned before, the API aspects? What do you think, from a point of view, the cybersecurity measures are going to look like? How do we control these things?
You can't control them.
Okay. So the world's ending. Okay, the world's ending. Got it.
It's the Wild West.
Yeah.
That's exactly the phase we're at. There is incredible disruption. Hacking has become democratized. You have script kiddies that are, in Russia and Ukraine or wherever. Unless you cut the internet from these countries completely, send them back to the dark ages, they're going to be around. It's getting very, very advanced. And the important thing for banks, institutions, I'm talking from a cybersecurity perspective, is to not be the low-hanging fruit. That's the important thing. If you're the low-hanging fruit, they're going to come and get you. If you make things difficult, but with usability, that's what that's what we do. We solve what we call the paradigm shift, is bringing usability to security and allowing consumers to have their free choice to secure their personal apps, etc. Because you also have issues like island hopping. Say a bank will be like, all right, I'm going to have this solution, I'm going to use this. But their own employees, Facebook is not secure. Their Twitter is not secure, so they'll steal their passwords there, they'll look at their check-ins, and then they'll see what time they're going on holiday, what time their flight is, they've checked in at the airport, and bam, they've already penetrated their system. Okay. So it's a holistic approach, and what's important is you have to constantly keep running. What Omar mentioned outside was, it's a constant marathon. You cannot stop and
Cold War.
It's a Cold War.
It's a Cold War.
Yep.
You can't sit back and relax and be like, all right, you know what, I'm fine. You have to constantly run and stay above the fray. Because the fray's happening, there's a big fight, you should just get out of that fight. It's like Syria. You have all these countries and wars. Like, you have to get out of there.
Okay.
So,
Omar, what's your thoughts on that?
Just to add to what Omar was saying, I think for your example, how things will change.
Yeah.
So you gave the example of Uber. So that Uber captain or Uber driver, in the past, if I was driving, I was getting a salary, right? Now I'm not getting a salary. Now I have a stream of income. So how would I borrow money with a stream of income if I don't have a W-2 or a salary certificate or a letter of employment to verify how much I'm making? But now that stream of income is, you can look at it, you can track it, you can get it from Uber, you can get the reviews from Uber. So a lot of that information that you did not have in the past as a financial institution, you can do that on in this case, let's say the borrower. From a security point of view, everything is on the mobile, so the authentication, where did you go? Did you take a break? Did you do this? Did you do that? So, I mean, I think Omar is...
So that transparency, that transparency in the security would be put more back to the user in some cases.
Yeah, but from a banking point of view, like Omar said, I mean, you can't say, we implemented this solution and we're done and we're fine for a few years. You always have to have, I mean, from our case, for example, we have to go through a very rigorous PCI compliance every single year. We go through penetration tests. I can't tell you how many times a year, but we go through a lot of penetration tests. Yeah. We basically hire companies to hack us. We have ethical hackers that constantly try to think of how the hacker would try to penetrate our system in order to fill those holes. I think the paranoid only survives. And in the case of financial institutions, there's a much bigger risk from security than from regulation. Regulation, you pay a fine, you'll have some bad PR for a few weeks, but if you get penetrated and all the information gets stolen and gets compromised, you're toast.
I totally agree. So we'll just one last question before we open to the audience. What's your sort of, and you hinted on them before as well, what's your top 3 security controls that you would sort of implement? You talked about penetration testing / ethical hacking. From there as well, you talked about the PCI compliance, which sort of encompasses a lot of different things in there as well. But what would be your top 3 things that you would never?
So a lot of encryption goes into how we develop our code, and of course the biggest threat is not the technology. The biggest threat is actually the people. So you have to know your team. You have to know their background. You have to do background checks on them. You have to have dual controls. You can't just leave all the keys of a system to one person. That person can be compromised, not because he's not ethical. Another person can be compromised by having their kid kidnapped, right? We can all be compromised. So unfortunately, you really have to think of the worst case scenario, and you have to plan for the worst case scenario.
Love it.
To add to that point,
your choice, yeah.
I think another very important point is the cloud. Like, that's the best security measure. Now, there's a perception, we were discussing this in the MENA region, and that's that the cloud is not secure. We've had so many banks, and actually somewhere on the panel, like Garanti was a customer of our on-premise solution back in the day, and there was one other bank that wanted the same solution. And we're like, you know what, guys, sorry, that was like Garanti was the last customer that had it. We're now migrating to the cloud. Do you want to use the cloud? They're like, oh, no, we don't want. Garanti was the only bank that was like, yes, I want to use the cloud, and their regulator didn't allow them, and they're still not allowing them. But all the other banks see the cloud as something bad. What they don't realize is they already are using the cloud. Their marketing department is using Facebook. Their whatever department is using Twitter. Exactly. They are directly in the cloud. They're using cloud products. I mean, none of them turn back to the regulator and say, hey, look, we're using these cloud products over here. So what we've actually seen is we have a lot of banks now using our product to secure their Twitter, Facebook access because of, we have a module called the Sharing Center, whereby no one sees the password and only the admin knows the password. So no one in the marketing department knows their Twitter password, LinkedIn, Facebook. Because what happens is a lot of banks, they give this password out to everyone in their marketing department. Everyone knows it. So when someone goes on and posts something, tweets something, no one knows who did it. Yep. They're like, we don't know. It's like, is this all around? It's not being changed. They all know it. So we're seeing a lot of banks adopting that product. And from there, they're like, hey, you know what? This is really good. We can actually use this for our core banking, for our mobile banking, app-to-app authentication, or for online banking login. But it's kind of like what Elias mentioned in his presentation. You can't go with a big bang, like, all right, we're going to do everything in one day. It's step by step. Start from one place and then do the others. But yet again, answering the question, the cloud is the most secure place because we have 50 employees, we have 20 hackers, other cybersecurity companies are all the same. They're all focused on their niche area. Let's say if it's an antivirus company that's in the cloud, that's their expertise. You cannot compete with these guys. It's impossible. None of these, cyber geeks are going to come work for you guys unless they're like married, they're settled. They're like, hey, you know what? I have to live in Beirut or I have to live in this city. I have no other choice. But yet again, we have the best talent. We have the know-how. It's the cloud that has the highest level of security because it's constantly being updated. On your phones, you keep on getting security patches, like updates. Most of them are security patches, the updates that you do. They're constantly being updated. But when you have an on-premise solution, I mean, for heaven's sake, how many times have you guys done a real update? It's maybe once every year, you know, or when you guys have a breach, it's like, oh yes, we were on version X, whatever, Windows XP. You're like, oh my God, you're not on Windows 10. No, that's the cloud. So that's my.
I agree. So I certainly think, obviously, for everything for the people, and I totally agree, the people are the weak link in the overall process. I love the people awareness thing, the encryption thing, obviously the adoption of cloud as well. You also hinted at, you know, about the outsourcing, because even if you are adopting some cloud services, maybe some outsourcing, you know, you're doing it for attack and pen, testing, etc. And I like the idea of the worst case scenario planning. I think that's the key, because the attackers, in my view, are also innovating at the speed of light, innovating faster than I would argue what even fintech is doing at the moment.
We're actually using the cloud for our computing.
Yep.
We don't keep the encryption keys on the cloud, we keep them elsewhere.
Yep.
Just to make sure. But yes, I mean, that's the best way to secure your product. It's the best way to scale the product. Because you don't know when your merchants will go from 100,000 transactions a day to 1 million transactions a day. You need to scale, and you can't just you can't just say, okay, we're going to have all these failed transactions until we figure out how we're going to scale.
Exactly.
You know,
That's fantastic.
You won't have any merchants.
We'll have to wrap it up there and ask for questions now. So I think we're about 4 minutes left. I'm looking at the person in the corner. She's going to tell me yes or no. So any questions? Anyone going to throw a curveball at us? The hate cloud, love cloud.
Just to clarify with Omar, I was reading about Goldman Sachs that they have a private cloud. So are you talking about public cloud or specific?
I'm talking about public cloud.
Public?
But see, look, the mentality issue, that's another issue. A lot of banks that we've seen are like, okay, I want, and it's actually very menace specific. I want my brand on your app. You're like, no, I'm sorry. You know, you integrate, there is no branding, you use it. But everyone wants like mine, you know, like it should be mine. It's like, no, you know, this is, you know, when you use Gmail, are you like, no, I want my face on my Gmail login? You don't, you know, but of course with predictive AI coming out, you know, artificial intelligence down the road, you will probably start seeing your face. But that'll be a technology working in the back end. I mean, what I'm trying to say is, yes, you can have a private cloud too, but
it's still in your control. Your entity is
yes,
still controlling it. It's
exactly.
no different than physical infrastructure.
Exactly. It's just a difference of the makeup. But you will always have your releases coming later on. Let's say 2 months later. It'll still be faster than on-premise, but companies will always focus on their core product, and they will always do private cloud for that, you know, very special customer that's like, you know, I'm the most special bank on this planet. I'm the most this. And it's like, no, you're not. But that's the reality of life.
There you go. One
No,
more.
that's Goldman Sachs. Look, Goldman Sachs is a very special bank. They help the Greeks, right?
One more question. We're available afterwards for any interesting questions at all. So I want to thank you for your time. Thank you both for your very interesting answers.